Hello, my name is David Buckland and welcome to this week's Video Insight. It has been 3 years since the establishment of Montgomery Global Investment Management and the launch of two products, the Montgomery Global Fund, a long-only global equities product, which has averaged 20% cash since inception, and the Montaka Global Fund, a long-short global equities product, which has averaged 47% net market exposure since inception. Over the 3 years to the 30th of June 2018, we're very pleased with the results. And today I am going to focus on the risk of loss of capital. In short, the Montgomery Global Fund has put on 45.5% after fees and expenses, outperforming its benchmark by nearly 14%, or an average of 3.75% per annum. The following graph shows the Montgomery Global Fund has demonstrated very good risk-reward attributes over its 3-year life. When the market goes up, the fund captures 102% of the upside. Conversely, when the market goes down, the Montgomery Global Fund captures only 70% of the downside. The Montaka Global Fund, our long-short global equities product, has also done well by putting on 36.8% over the 3 years to 30th of June 2018, outperforming the broad market by over 5% after fees and expenses. The important point to make here is investors who have received these returns are taking significant less market risk, as Montaka Global Fund has had an average net market exposure of 47% in the dollar over its 3-year life. The following graph illustrates two risk attribute points which are very important for Montaka. The first risk attribute is the Sharpe Ratio, which is on the y-axis. It sits at approximately 1. Without getting too complicated, the greater the value of the Sharpe Ratio, the more attractive the risk-adjusted return. Note, an investment in the MSCI World Global Equity Index would have given you a Sharpe Ratio of about 0.6. The second risk attribute is the correlation of US dollar returns relative to the broad market, which is on the x-axis. It sits at 0.4 or 40% correlation coefficient. This means that Montaka's returns are not very correlated with those of the broader market, or with our peers for that matter. This is a benefit for investors looking for equity market diversification. So in short, both the Montgomery Global Fund and Montaka have delivered their investors very pleasing risk-adjusted returns over the 3 years to June 2018. As many of you know, Montgomery Global Investment Management has recently grown its team. Amit Nath, George Hadja, Daniel Wu are all based in our recently established New York office, and Christopher Namazi will be joining the team in a couple of months. While Andy Mackin, Chief Investment Officer of Montgomery Global, Lockie Mackay, Paul Mason and Craig Norton are based here in Sydney. That's all I have time for this week. Please continue to follow us on Facebook and Twitter, and thank you.